Yeah, yeah, yeah. Welcome to Beyond the Block, everything crypto. Welcome to Beyond the Block, everything crypto.
All right, everybody, welcome back. I'm really excited about this deep dive today because we're talking about something pretty important for anyone holding crypto out there.
Definitely something to keep an eye on.
Yeah, for sure. So we've been following the IRS's kind of back and forth on how they plan to tax crypto.
Right. It's been a bit of a roller coaster.
Yeah, it has.
Yeah.
And remember a while back they were saying that everyone would basically be forced to use that FIFO method, first in, first out.
Yeah, that announcement definitely ruffled some feathers.
Put it mildly, right?
For sure. I mean, imagine this. You buy some Bitcoin, let's say back in 2020 when it was around, I don't know, $10,000. Then you buy more a year later when it hits like $50,000 during that crazy bull run, right?
Oh, yeah, a lot of people were jumping in then.
Exactly. Now, fast forward, you decide to sell some of that Bitcoin, and guess what? The IRS wants you to calculate your gains based on those initial coins you bought at $10,000. Even if you're selling the ones you bought at $50,000.
Which means you'd be taxed on a way bigger profit than you actually made. Right.
Exactly. It just doesn't make sense in a lot of cases, especially if you're thinking long term.
So what's changed? What's the good news here?
Well, the good news is the IRS just issued some temporary relief on that whole FIFO mandate.
So like a timeout.
Pretty much, yeah. They're basically hitting the pause button on it until, get this, December 31st, 2025.
Wow, that's a pretty generous window.
It is. And it gives crypto holders some breathing room to really think about their tax strategies. Instead of being forced into FIFO, they can explore other methods.
Like what? What are some of the alternatives?
Well, there's HIFO, which is kind of the opposite of FIFO. It stands for highest in, first out. So you get to sell your crypto that was bought at the highest price first.
Which would minimize your taxable gains in a lot of cases, right?
Exactly.
Yeah.
Especially in a scenario like the one we talked about with Bitcoin. Then there's specific identification, which gives you even more control. It lets you pick and choose exactly which coins from which purchase you're selling.
So like if you bought Bitcoin at $10,000, $30,000, and $50,000, you can choose to sell the $50,000 ones first if you want to.
Yep, that's the idea. It allows for a really tailored tax strategy.
This all sounds pretty amazing for crypto holders. But I gotta ask, wouldn't some people actually prefer to use FIFO in some cases?
You know, that's a really good point. I was reading some commentary by Mark Thomas. You know him.
Yeah, he's pretty sharp.
He was saying that some people might actually benefit from sticking with FIFO, especially if it helps them qualify for long-term capital gains tax rates, which are usually lower.
That makes sense. So even with this relief, it's still important to think about your own individual circumstances?
Absolutely. No one-size-fits-all solution, right?
This whole conversation reminds me of something else we've been talking about, that lawsuit against the IRS from the Blockchain Association and Texas Blockchain Council, right?
Oh yeah, definitely relevant. That's another big push for more control and clarity in the crypto space. They're basically challenging new reporting rules that the IRS wants to implement in 2027.
Which would require brokers to report tons of info about users' crypto transactions.
Exactly. And the Blockchain Association, they're arguing that these rules are unconstitutional and could really stifle innovation in the industry.
It's wild to me how much is happening so fast in the crypto world, both with regulations and just like the overall technology.
Yeah, it's a constantly evolving landscape, and honestly, that's what makes it so exciting.
For sure. It keeps you on your toes.
Totally. This temporary relief from the IRS is a huge win for crypto holders, but it's just one piece of the puzzle.
And with all these changes coming down the line, what's the one key thing you would want our listeners to take away from this deep dive?
I'd say this is the perfect opportunity to step back, really assess your crypto investment strategies, and think long and hard about your tax planning.
Don't just assume what worked before is still the best approach.
Exactly. Explore HIFO, look into specific identification, maybe even talk to a tax professional who understands crypto. See if these methods align with your goals and risk tolerance.
Sounds like good advice.
And one last thing, never stop learning. The crypto world is constantly changing, so stay curious, stay informed, and most importantly, stay engaged.
Great advice. Well, that's all the time we have for today's deep dive. Thank you so much for joining us.
It's been a pleasure.
And to all our listeners out there, happy investing.
Everything crypto.